Good morning, everybody. Happy Monday. Welcome back to the Daily Prof Plan. Chris Pulver here. Blake, good morning. What's happening? Let's get the chat up, everybody. It's sort of screen. All right. We're starting off with some price action drama today. Department of Justice criminal investigation probe into Jerome Powell. So the market's not loving that. This just continues to, play the note of Trump versus Powell, the Fed. I think it's noise. I really do. But I just spent the last 45 minutes walking through engineered options, getting the trade alert set for today. So we have a pending order on 3 levels, and I'm choosing XSP as well as defense trades for this week. So take a look at that in engineered options in the Telegram channel for members. If you'd like to be in engineered options for that trade alert, then join Lance and I today at 1:30, or give our team a call if you want to jump in right now. The trade alert is still active and posted, so we'll see what happens at opening bell. All right, let me get the chat up here for everybody. We should see some new names jumping in. I shared the link this morning, so we might have some new faces, which is totally fine. Don says, you going over the engineered option trades? I can touch on it this morning. I'm not going to show the trades. I mean, that's for members only, so obviously jump into the Telegram. David says, I'm new to the service. The alert's not opening. You have the Telegram up, right, David? I mean, the market hasn't opened yet. So, I mean, these trades are going to be sitting, pending, good till canceled. And we'll see if they get filled this morning at 9:30 or shortly after. Cool. Okay. Greg says new to engineering options. Excellent. Hey, Donna. Hey, Tom. Dave, good morning. Mark, good morning. Mark Licorice. Like that name. Do you enter each level separately? Yeah. I mean, it's, one trade is at a particular level. Another trade is a particular level, another trade a particular level. So what I did show this morning in Telegram, this is a screenshot of my engineered options with my choice of XSP and my contracts. So I explained that all in the video message that I sent out this morning. So check out that video. These are the trades. You can put these in good till canceled, good till canceled, good till canceled, and then let them ride for the week. My max risk for the week is $300. My max profit would be $300. So it's 1-to-1. Okay. For engineered options, are we supposed to take all 3 trades? Eric, you can do whatever you want. I said that in the video. If you don't like the levels, if you don't want to take defense trades, you certainly don't have to. Okay. But I am taking those levels. If you wanted to go one contract, the maximum risk would be $150 for XSP. So there's never a reason for you to have to take anything. If you don't like the trade, don't take it. If it's uncertainty in your brain, don't take it. All right. But small risk wise, we could go all 3 of the levels I chose this week, and we could, have our participation plus defense, and we could risk 150 to make 150. Or even if it's like the first trade gets filled and the market fills the gap. I mean, realistically, look, if the market is going to open up today, and we'll find out this morning, we've got about 25 minutes for the open, but the market's likely going to gap lower about 0.54%, 0.55%. So we're going to be pushing down to like 69.30 today, just at the open. But, gamma levels this morning probably pressuring the downside to about 6,900. Now, we have seen 6,900 act as support quite a bit these last couple of weeks. Have we not? Lots of support here at 6,900, right? And then we broke down, came back above. We had support here around 6,900 again. Support here around 6,900 again. So could I see prices using 6,900 this week? Yes. In the near term, I would say the 6,900 is a bit of a line in the sand. So if we gap lower, right, and we find 6,900 and the market spends the rest of the week filling the gap, we're still making money. If the market gaps lower and pushes lower into sub 6,900, then we have some pressure to the downside. That's why I have defense trades in for engineered options. If I lose a trade here, but win a trade here or trade here, if I win and lose, I still make money. That's the beautiful thing. Okay, video's in the Telegram message. They're done. Let's see here. First service with you. I'm excited to see where this goes. Been joining the daily broadcast right after you joined Roger, or right after Roger, before Nate and Graham got it. Detailed your own teachings. Thanks, Brandon. Appreciate that, dude. Brandon from Utah, where you at, dude? I'm in Farmington. Were you in the session last night? Were you in South Jordan? Is that what I saw? I saw South Jordan, Utah pop up last night in the webinar. Stephanie, I talk about it in the video. Look, it's all for trade size this week. I'm not going big trade size. I don't want to risk 750 this week. It's like, look, I don't know what's going to happen. We have something that's pretty unusual, right? Our Fed chair is being probed by the Department of Justice for criminal investigation, right? Do you remember what happened last time Trump said he's going to fire Powell? The market sold off 0.75% in a day, right? Did it stay? Did it stick? No, but it was volatility. So I'm just exercising a little bit of caution. I'm aware of what's happening. So there's no reason for us to be trading blind here. It's like, let's be aware of the situation. Let's do some math. Let's make sure things are postured, and we go from there. Okay. Mark says a new Telegram channel. Yes. Your engineered options does have a new Telegram channel. So one-click trading. Stacey says a copy of trades question. These may not fill. It's possible. So the way that they wouldn't fill, here's what I would say. Let me get into one-click trading here in a moment. And I get it. We're gonna have a big room today, and engineered options is brand new, so it's gonna be maybe a bit of domination by engineered options students. But here's the deal: you have a bit of a window with me for the first 20 to 30 minutes, because once it's 9:30 opening bell, all I'm gonna pay attention to for engineered options is, does my trade fill? Because it is then focused on, we are going to trade daily profit play, right? That is a 0-day trading service that I do every single day. So, time and a place for brand new students. We have a big class for engineered options. That's great. But it is a pretty simple execution. Set the trades up before the market opens. They sit good till canceled for the week. My intention is to win the week. Make sense? Okay. So let me log into engineered options classroom and one-click trading. Yeah, Larry says a market maker move seems pretty tight based on the news. Yeah, I mean, you can look at the gammas today. I mean, it might be, because if we're gapping lower, that might be most of the price action, kind of pushed in right into the gap. We've seen that before, right, Larry? The market's down 0.5% and it barely moves through the day. So let's approach this with daily profit play this morning. I'm probably going to do a lower delta, probably a 10 delta, and see if Monday can still give us a range based day. Okay. Yep. I chose. So I updated the Telegram. It's the 20th. 120 expiration is Tuesday next week, because we have, I think it's MLK Day on Monday. So the markets are closed. So in the video I said 119, but in the Telegram message I updated the 120, because that's what I found as soon as I went to my broker platform to execute the trades or enter the trades. I saw, oh yeah, Monday's a holiday. So it's in the Telegram, correct? It'll be in the tracker properly. Okay. So using the 120 expiration. All right. So classroom here, I'll show for engineered options. You can just search engineered options. Okay. And we should have an alert in Telegram. So make sure when you jump into the classroom, alerts here in Telegram. Okay. So click on your Telegram channel for engineered options. It looks like this. Engineered options Telegram. This is the message that I posted this morning. So this is a video update. You can watch that at your convenience this morning. This week's setup, 1 hour chart making firm indecision with our gap lower, but the 4 hour daily are still postured bullish. These are the levels. Also, I'm choosing contract sizes where my max risk for the week will be $300. My max profit for the week will be $300. Okay. So in my video message, it explains my choice of XSP and contract sizes for the week using the 120 expiration due to Monday holiday trading. Right. And I put in the link this morning if you want to join me for live session. So this is from my broker platform. 1 contract, 2 contracts, 3 contracts for those credit spreads. This is a pending order. We'll see if they get filled this morning. So inside your classroom, get your Telegram. Inside your classroom, you have your video education. So I walk you through the entire strategy guide. Okay. And engineered option level. So I'm using my indicator. I'm using my average trading range. Calculate out my levels, as well as an example using SPX and XSP for a weekly and monthly example. This week on Thursday for engineered options, I will have a masterclass. I still like my monthly trades. So I will have a little gap today. Trying to think. I have daily profit plan this morning, waterfall income right after that. I will go in and update my monthly trades for engineered options because I still like them. They have not been filled because we drifted higher these last couple weeks. So I'm still looking to see, like, based on where the month started and my monthly levels, there's a couple levels I like to put in as well. So there'll be some more updates coming, hopefully today on the monthly setup, which is it's just a bonus. I mean, my focus is I want to go week to week, but certainly I think the probability of a monthly profit is much higher. I mean, go back historically, we've had about a 60% weekly bias, but we have like a 68 to 70% monthly bias. That's just historically speaking, like the ability for the markets to finish positive on a monthly basis is, like almost 10% greater. So we play the house edge. Okay. All right. Do they need the 144 in the 50 period? They don't, Chuck. You don't have to have them, but it certainly helps. I mean, here's what I will say on engineered options. Again, I know we're getting overwhelmed here by engineered options. That's okay. You're all new. I love having you in these daily profit plan services or their sessions anyway, right? You should join me and talk every day. Come here and talk. This is what it's for, right? I mean, I run a lot of services and we can touch on all these things in the morning. So I understand that today we're getting a little bit of domination by engineered options. That's okay. It's brand new, right? There's a lot going on. We have hundreds of new members. So, I'm addressing this, but also we still have 250 every single day, daily profit plan. We have 1,000 members in that service. So by the time we hit 9:30, we're going to put a pin in engineered options. We're going to talk daily profit play. And then at 11:30, I will go into my waterfall income. It's like, these are all very different strategies. These are all ways for us to make money, but this is a brand new course, so I get it. Just make sure that you have access to your classroom and access to Telegram for members, because that's where the trades are posted. That's where the video update was posted this morning. It's a short video. It's like 10, 12 minutes. Actually, not even, I think it's 8 minutes. Okay. CL says you're only trading $300. How often are you getting the large amounts? I mean, if I want to risk thousands of dollars, I can make thousands of dollars. I don't feel like risking thousands of dollars this week. I don't know what's going to happen. That's a lot of drama to start out the week, right? We're sitting at all-time highs. The market is looking a little, toppy. I could see some pullbacks. There's two things I see happening in the markets. One is, let me get another workspace up here. One is this market doesn't care about anything, and we're just going to blow the top off, right? Like where we are right now, this is IWM. Let's go to SPX. Can you see that this market, after this 6% correction we saw back in the top of October into the November 20th sell-off candle, we did make our way back to all-time highs. We have proceeded higher. This is not a bad thing. The market loves that 7,000 handle. It would be extremely disappointing to see the market not hit 7,000 when it's only 34 points away from it, but then start to turn over. Now, look, this is either structure breaking down, where we start to get a correction back down to the same type of levels we've seen before, and the market is going to be sideways for the first little bit of 2026. Or, and this is where I think the market would surprise everybody, is we break these highs and we proceed to go higher. And if we blow the top off early in 2026, then I think this market runs hotter and higher than we think, and then we prepare for some ugliness later, right? So look, I am prepared for everything. And what can I control in my trading? My trade size, my risk, right? If the market's going to be up here, we will probably have weeks and weeks and weeks of upside flows. But if the market is going to start to show uncertainty, well, yeah, we could pull back into support, right? We could bounce off of here. And so my engineered options, we go into our dashboard. We see the 1 hour showing indecision or bearishness. The 4 hour might be indecisions. Like, we'll stay out. And we'll participate when the coast is clear. So I'm going to still participate this week. I'm going to lower my trade size to take on less risk. Okay. All right. Yeah. It should be for everyone, isn't it? Is chart? Yeah. Everyone can see the chat. So here's the thing. I want the chat to run. So when I'm in the morning sessions, these daily profit plan sessions, when you send comments, if you don't mind sharing with everybody, I would encourage it. So we have a open community here. Send the message to everyone in the Zoom chat. So when I'm seeing questions from Jeff and David and Donna and Justin, if you send it to everyone, not just hosts and panelists, that way the whole group can see it, right? I mean, we're all one big happy family here. It's okay to share. A lot of wins, share some frustrations, some losses, like. Yeah, I mean, be respectful, but we're here to help everybody. Okay. All right, there we go. Justin says, I'm brand new. I don't know where to even start. Okay, Justin. Well, here's the deal, man. If you're in engineered options, here's a great place to start. If you did engineered options, here's a great place to start. Get into your classroom. You shouldn't be, if you're not comfortable placing a trade, if you don't even know what you're doing, then don't place a trade. Please don't place a trade. Start here with, education, and start here with practical options. Inside my engineered options course, I'm giving you the practical options training course. This is 13 of my favorite option strategies. But before that, I explain, let's go into the practical options course. All the videos are posted here. Okay. We have key terms when it comes to trading options, calls and puts, debits and credits, right? See all 11 items. So key terms, a risk graph, looking at an option chain in a broker platform, strategy guide, that's a video walkthrough of the strategy guide PDF, buying calls and buying puts, bullish spreads, bearish spreads, calendar spreads, butterfly spreads, strangles, and iron condors, which are directionally neutral trades. That's a great place to get started. So, I don't want anybody to be placing trades not knowing what the result can be, not knowing what the risk is, not knowing what the profit is, and not knowing why we're getting these trades. Why would I take this trade? What am I doing? What's my risk and reward? That's like the bare minimum. That's the stuff that we can control. And so if you need to be spending more time on just the education portion, so this makes sense, please do that. Please spend time on the education portion. Okay. All right. Engineered options intros are great. Thanks, Greg. Appreciate that. What are the prices for the 3 EO trades? Eric, it's in Telegram. I'm looking for a 1-to-1. Liz says, I don't see XSP. Double check. I mean, I'm not sure who your broker platform is, but check out like $XSP or maybe XSPW. Who's your broker platform? And if anybody is trading XSP and we can share this again, that's what we have. Schwab. So type in, if we go Schwab, that it should be Thinkorswim. If you have a Schwab account, you can use Thinkorswim Web. It should be $XSP if you're in the web platform, or if you use Thinkorswim, you should be able to just type in XSP. I'll log into Thinkorswim right here. So this is my Schwab account for Thinkorswim. If I type in XSP, it pops up right there. Okay, if I'm using the Schwab platform, which does take a little bit longer to build out that ticket, you can use $XSP. Okay, does anybody trade Webull? I see Peter's comment there on Webull. XSP or $XSP or XSPW may be the symbol on Webull there, Peter. I know you can trade it. Zen says, Thinkorswim did not show me for either. Now it does. Okay. All right, so if I log in and see, you've got a few more minutes here. All right, like I said, at like 9:25, we're going to put a pin in engineered options. You've got the Telegram message. You got the video message. You got the pending orders. That's for you. 9:30 when the market's opening, I've got to run some calculations for my daily profit play for 0DT. Okay, Vivian says $XSP.X in TradeStation. Okay, all right, let me log into, this is the Schwab platform. I'm pretty sure in the Schwab web platform, it's going to be $XSP. James, I'm doing all three because I have a feeling that the market is going to be, opening, pressuring to the downside. Like I said, the last time we had some drama between Trump and the Fed, the market sold off 0.75%. Now, later in the same day, it was back up to flat. Later in the week, it was actually up to fresh highs, which could very much be the case here. Okay. All right. So I'm going to go trade. Let's look at the options chain. So I have an E-Trade account. How would you recommend me transition to your recommended platforms? They're not recommended platforms. It's just who I use. I mean, I use Tasty. I use Thinkorswim, which is a Schwab account. I don't recommend any broker, but I will say that when traders come to me and say, Chris, my broker said I can't trade this way. Well, then I say it's time to find a new broker. If they will absolutely not let you trade a basic spread or trade the option permissions that you want, especially when you know what you're doing, or especially if you're following somebody like myself, where there's no crazy undefined risk that we're doing. These are all defined risk trades. You are a much more responsible trader with the trades that I'm posting as alerts because it's all defined risk. So if a broker's like, nope, sorry, we won't do that, then yeah, I'd say it's safe to consider another broker. But every broker that I know, like you have a stockbroker, permission to trade options, they should let you trade how you want to trade. If they don't, I've migrated brokers probably over 10 times in my career. Why? Because ultimately where I know where I want to be trade permission wise and know what I want fees and commission wise, that's who I'm with. Those are my brokers. Okay. Jeff says, start with the early question. It does say 120. Yep. I updated that. Okay. So in the, let's go $XSP. There it is right there. $XSP. And that's in Schwab for the web platform. Now, again, this takes a little bit longer to build this out. I would recommend if you do like using Schwab.com, I think you would love just jumping into Thinkorswim Web. This is a much faster way to execute your orders in Thinkorswim Web. Okay, so if you like Schwab.com, I think you should start looking at the Thinkorswim minimum Thinkorswim Web platform, because your Schwab account, they own Thinkorswim now. So you can use a Thinkorswim web platform for your Schwab account. Yep. Okay. Yep, Chuck, like I said, it's a pending order, good till canceled at 50 cents. So we're waiting for price to fall to our levels to get us filled. I personally like the web better. Web to me is way better than the app. So the application, like a Thinkorswim application, is great because it has so many tools and features, but it is not very intuitive to learn. Like when you first see it, it's very intimidating. The font is crazy small. There's 10 different widgets to play with, and all you really want is give me my asset, give me my option chain, let me find a trade. Thinkorswim Web is a little bit more concise, a little bit easier to navigate, just way less stuff to kind of filter through to figure out what exactly do I have to do to trade. So I personally, as a simple tool, I just like the web platform better. It's way faster to jump in and manage. Just my thoughts. Okay, Clinton says, I'm in engineered options, but the trade alert does not show the options alert. It's in Telegram, Clinton. I mean, look, if you need support, this is engineered options in Telegram. This is my trade. This is my video message from this morning at 9 o'clock. There's a video update. These are my levels. If you're not seeing access to Telegram, it's inside your classroom. If you need support, contact support this morning. Okay. Email the team, give us a call. Figure out how we can get you slotted for class, right? Get your classroom assets and get into that Telegram messaging. Okay. All right. So next week, the trade alert will be on two. Yeah, correct. Yep. So we'll take engineered options next week. We'll start the market on Tuesday. So, this week, again, the plan is we have the trades in. Next week on Tuesday, we'll see, where we're at as far as like managing the full profit, or if we want to look at what's happening on a Friday, maybe we're up 85, 90% of max profit. We can also protect some profit there by this week's Friday. We'll see where the market's at. Okay. But our expiration will be out the Tuesday, and we'll make that decision by Friday whether or not we want to close. I want to give the market the weekend, right? If the market has a drama week and it gets us out of a system, and then we have a holiday and we gap up, or at least have some push to the upside on Tuesday, that's good for us. So I want to give it that time to kind of fix the noise. Okay. Yep. That'll be in the masterclass there, Zana. We'll talk about that on Thursday. Okay. All right. Here's the deal. Let's put a pin in engineered options. If you do not, here's what I'll say. If you do not have your engineered options Telegram, please contact our support team as soon as you can at your convenience. Look, these trades they're pending, right? So this first trade might get filled this morning because we have a gap lower. Great. It's still going to be valid. Unless the market gaps and immediately shoots higher, it's going to be valid. So these trades are all valid for engineered options. There's not a huge rush. There's way more time sensitivity on my daily profit play, which is in 3 minutes. So I want to start Switching gears to that, I want to calculate some levels. We are going to have some volatility this morning. Futures are down about 0.57%. Okay, so we are looking at a pretty decent gap to the downside. My plus minus on the day. So we're going to switch gears here for daily profit play. And SPX for today's expiration, we're looking at a plus minus 23.43. Like Larry said, that's a very quiet day. 23.43. Despite the gap lower. I don't know. I think we're going to see some excess volatility. But again, when it sits here at 23, let's see how much forgiveness we can get built into our price action for daily profit play. Okay. All right. So we are going to start here in about 2 minutes. 23.43 for a 112. Right. And look, for everyone that's in, I know we have a lot of new faces today. We have a lot of new names. It's awesome to see a huge crowd here for daily profit play. I love this stuff. I'm here to trade with you every single day. All right. In this daily profit plan session, we are going to be busy, right? This is a very actionable trading session where there are a lot of things like that I talk about. There's a lot of moving parts. Don't be overwhelmed by me jumping from one trade to the next trade to spot checking this. It's like, I've been doing this stuff for a long time. But we have individual classes for individual strategies, right? We have a day like this when it's like, when I'm trading 0 DTE, it's very time sensitive. Like daily profit plan opens up here in a minute. Engineered options, the time sensitivity was you joined Lance and I last night, you jumped into the class, you're looking for the alerts. All I got posted this morning. Like my work is done for engineered options. Like those are pending orders. They're good till canceled. My work is done. Let the broker fill them. Let my trade be managed. We'll take a look at them on Thursday for the masterclass, Friday at the end of the week. The expirations are out to Tuesday. Doesn't have to be challenging. Okay. So now it's about, let's learn some other nuggets. If you like the idea of trading every single day, maybe you love daily profit plan. If you want the idea of just sticking with engineered options and trading weeklies and monthlies, stick to that, right? I'm not here to talk over anybody. I'm not here to overwhelm anybody, but understand that you're joining a trading session and there's a lot going on every single day, obviously. Okay. All right. Just got profit on Baidu. Nice. Took some profit on Baidu with a gap higher. I'll take that. Nice little fat win. Open SPX at 24.4. So we actually have a slight increase on the expected move for the day. Daily profit plan. Let's see where we're opening up gap wise. So we opened up around 36, which is slightly higher than I thought. Futures at 0.45. So we are gapping lower though. I mean, don't forget that we did calculate a gap this morning. Look, there's pressure today to push down towards 6,900. If I'm looking at my daily profit plan trade, I want to be able to sell below 6,900. Okay. Or I'm looking at a gap fill here towards the 69.65. Again, drama, noise. Let's see what the market wants to give us. But we're right in between. We're right in between a gap fill and some big gamma levels to the downside. So does the market do nothing today and it stays in the middle? Maybe. But to be safe for daily profit play, I would say this. If I'm selling calls, I want it to be up here. If I'm selling puts, I want it to be down here. I want to try to give myself a chance to stay out of the noise. Okay. All right. Thanks, Don. Appreciate that. All right. Masterclass on Tuesday. Masterclass is on Thursday for engineered options. Thursday, 2 p.m. Eastern time. Okay. So let's go into SPX. I'm looking at levels. So we had the 69.70. I'm just going to write some stuff down here. So 69.70 and 6,900. Let's look and see what type of drama we have today. So we do have a gap lower. It might have caught the market makers on their heels a little bit, but all the stuff is priced in. There's all sorts of stuff going on with futures in the morning. Let me go into. So we're trading at 69.43. Pivot level 69.70. I'm going to go 8 delta here. So this is the 69.80.85. And below 6,900, I'm going to go 10 delta 90. All right. This is for 80 cents. Let's see if we can get this one filled for $1 today. Okay. $1 credit. This is for daily profit play. Pending order. It's coming into your members area right now. New trade. SPX today is the 12th. I'm going 80 by 85. 69.80. 69.85. 68.90. And 68.70. I'm sorry, 85. 68.85. So 80.85, 90.85, $1 credit pending. All right, that's in members chat. Let me do one thing really quickly. I don't mind the delta here. If I buy, sell, buy, I'm just going to entertain one different trade here. Could I get this trade filled for 50 cents or $1? Or consider my, maybe I go 10 wide this morning. 85 by 95. That's an 8 delta. And go 85 by 75 for $1. Actually, you know what? Let's go $1.50 on this one. Okay. Do I have any overlaps? 80 by 85. Yep. So so I could go 90. All right. So if I go 90 by 7,000. And 80. Let's see here. 90 by 80. All right. I'm going to do this one for $1.50. So we've done this before on Daily Profit Play. If I get filled for one of them, I will cancel the other one. So I've either got one that's going to fill for $1 or one that's going to fill for $1.50. Whatever one fills first, I'm going to try to cancel the other one. Okay. So let me update that for Daily Profit Play members. DPP new trade. And you can choose either one. You don't have to take both of them, but I'm going to go 10 wide and 5 wide to see which one fills. Hopefully one of them will fill today. 112 expiration, 6990, 6, that'd be 7,000 call, and then 6890, 6880, $1.50 credit. I'm leaving a 5 wide and 10 wide pending order. And if one fills first, I'll cancel the other. They are both low delta DPP setups. Okay, so keep an eye on that this morning. All right, so here's our price action. We're going up, right? Futures go up because we are, kind of bottoming out for the morning in futures. We're going a little bit higher in the initial open for SPX. Look, this makes for an interesting open because last week's close to today's open, plus all the pressures we see this morning. I mean, it wouldn't surprise me to see the market do something like this. Either all this is noise and the market's like, who cares, buy the dip. That's very possible. Okay. I mean, look, let's use our thinking cap here. Do we really think that something is going to happen to Jerome Powell in the next 2 months? The guy's term is up at the end of April. He'll be sitting as a passive board member on the Fed. He's no longer the chair. Somebody else is coming in. You have 12 members of the Fed that will be making decisions. So even whoever Trump wants appointed, whoever Scott Bessent wants appointed, it's still an academic council. It's 12 members. All right. So I think, like, just like you saw before, when Trump threatened to fire Powell, the market sold off intraday and it was back up, to the gap or higher later that day. So it could just be the market's excuse to use it to, buy another dip. Market's down from last week's sell-off. I mean, it's a 0.63% correction. Last week we had the same thing here. It was down about 2%, 0.95%. Go back here. This was like a 2% sell-off. Right? I mean, 1.7. Like these are actually okay. Selling off 1.7%, market makes new highs. Selling off 0.6%, market makes new highs. Selling off another 0.6%, market. I mean, it's noise. Right? It's noise. All right. Do you ever reset your EO trades? Generally, no, Doug. No, because look, I get where we gapped, but these aren't here by accident. These are option orders. We are in a negative gamma environment. Um, you can put this on your radar, but don't be surprised if the market finds 69.25 to 6,900. Today, tomorrow. If I go into some option flows, let me bring up some real time gamma. Dan, for what service? Engineered options trades were posted in Telegram. Daily profit play trades were posted. So yes, inside your members Telegram. Okay, here's my real-time gamma. So here's what I would say. Wow, this is interesting. This is some gamma stuff for this morning. 50% ATR to the upside. We opened up at the 50% to the downside. Look, price can flow to either, this is my positive and negative gamma pivot right around 69.70. Okay. Gosh, if we came all the way back to 69.90 today, that would be a massive surprise, but I mean, anything is possible, right? On that note, where are my levels here? 69.90 and 7,000. Gosh, 80.85. I kind of like. All right. I am going to make an executive decision here, cancel the 5 wide for daily profit play, only keeping the following order this morning. So keeping the 10 wide and canceling the 5 wide due to intraday gamma levels. All right. So is it possible that price gets to, 60, 69.60 today? Maybe 69.70, maybe. That's my positive negative pivot. This is all noise this morning. Okay. We opened up indecision. We have one candle up. The pressure is to the downside. Right now, it's interesting. It's kind of 50-50, right? You see that there are equal gamma levels to the upside, equal level gammas to the downside. What will start to happen in real time is if we are going to go lower, then these will decrease and these will increase. So that will continue to drag prices down towards 69.20, 6,900. That actually brings in my trades and pending orders and fills for engineered options because that's what we would need to see for that 1-to-1. Okay, 5 wides over 90 cents. Well, I'm going to cancel it and try to go after the 10 wide for $1.50. Okay. So can everyone see this on 0 DTE? So we have, some pretty good. This is a 7,000 gamma, which is still right there. It's not a nothing burger, right? But all the way down here to 6,900. The market just has to make a decision, right? Today might be a gap and hold, and there's just no real direction. But 7,000 and 6,900, they're both magnets, right? Here's a magnet that's going to pull price higher. I'll use my little magnet drawing tool. Okay, and then here's 6,900, same thing. I'm not sure which magnet is stronger, but right now we're trading right in the middle. But they both have kind of equal pressure right now because you can see the length of these gamma levels. That's one, and that's one. They're both there to kind of either two things, right? They're either going to keep price in the middle where there's no decision, or eventually one magnet's going to have a stronger pull and price is going to gravitate towards that, 7,000 or 6,900. Okay. All right. So right now it looks like the move to the upside is dragging things a little bit higher, which is fine. My goal is to hopefully get filled. This trade that I posted for daily profit play this morning can offer us $1.25 or better. I've got $1.50 pending. I'd love $1.25 or better. That way, if I wanted to put on some defense, I could and still net out a winner today. Okay. All right. So you're talking of another Trump appointee, which will swing the Fed committee. It's not true. He's not stacking the Fed, right? I mean, unless he's going to get multiple members to be fired or resigned. I mean, the Fed is 12 people. I mean, we have the Supreme Court stacked conservatively. You remember that Friday? Who remembers that Friday, by the way? The Fed or the Supreme Court was supposed to make this big decision on tariffs, and what did they do? They kicked the can down the road. Apparently now it's going to be the 14th. The Supreme Court's been stacked conservative. I mean, hell, we overturned Roe v. Wade, for crying out loud. It's going to be difficult to stack the Fed. And the truth of the matter is, I don't care if Trump does get his favorite appointee in the Fed. If this person cuts rates more than like 50 basis points this year, we are going to see hyperinflation in the U.S. There is no way this economy is prepared for cutting rates on the short end of the curve down to sub 2%, down to 1%. All we are going to do is this would be like Richard Nixon, Arthur Burns. You run this economy so freaking hot, we're going to have inflation probably at 5+%. And that's like, our government numbers that we're going to see. But we will see way higher inflation. So I don't think one person, a Fed appointee, can come in, even if they dissent from the entire committee. You still have to make a vote on consensus, right? The Fed chair can't overturn the entire committee. So this whole thing is noise, right? I mean, we have stuff going on in Venezuela. We have Fed drama. We have geopolitical risk out there between, Russia, Ukraine, China, India, this non-US stuff. We've got AI. It's like, it's all noise, people. I'm telling you, like, just focus on what you can control. If you want to trade the news and the speculation of what you'll never be right. All this stuff is like either baked in and it's noise, or it takes things to confirm on price action before we ever get our trades. Like, price action will tell us. So even going back to this right now, this is my engineered options dashboard. We're still postured for a 6-star bullish trade. Participation. It's great. Like, we are staying bullish so far this week. I mean, honestly, I'm hoping that we can hit 69.20, 6,900 because I want to see those prices filled so we get a chance to trade this week. Okay. Doug says, you mentioned last week you had custom work done, positive, negative gamma on your charts. Yeah. So that is right here. If you are familiar with gamma, so positive, negative gamma, all that is just a fancy way of saying where order flows liquidity is going for the day. This is a service that I've had for 6 years. I subscribe to them. I pay for their service. I had them build me a 0 DTE bundle. So you can see all of the positive gamma, negative gamma in a 0 DT environment. Okay. And you can see this on every instrument. If you want to trade Mag 7s, you want to trade your favorite stocks, you want to trade SPX, QQQ, SPY, DIA, whatever you want to trade, it's in here. Okay. We see, if you're in my daily prop plan session, we use this stuff every single day. So if you like information on this stuff, send me an email, chrispulverpub@gmail.com. So they usually charge, I've paid over $3,600 a year for the last like 6 years. I had this as an institutional side when I was on the hedge fund side, and this was one of my like go-to services for my option trading. And then when it came to 2022, I was running a book that was exclusively 0 DTE. This was my best way to accomplish it, is seeing where flows are coming in each and every day. So as I've been with them for the last 6 years, the last 2 years, I spend more and more time with them, and they've been really nice to say, look, you're an active user, you're a power user. We like your education, so we want to build you out. What do you trade primarily? I said, I trade 0 DT. So they built me out this 0 DT exclusive indicator. So now when you come in here to the study, this is 0 DT exclusively. We have all the strikes above and below. And in real time, I can see, what the biggest pull is for the market. So this allows me to, either one, find direction, or two, those range-based strategies, we can make money if price stays in the middle. We can get paid, right? If I have a stronger pull towards one side or the other, if price is going to gravitate towards these highs, that's fine. But then I want to get directional. So we can do debit spread here or credit spread here. We can buy calls, obviously, and take this up intraday. So if I have more of a directional push or directional look to the market, then I can take advantage of that as well. So, when you see this stuff for hundreds and hundreds and hundreds of trades, you get a feel for how this kind of visually works. And this is why I use it every day. Okay. All right, cool. Thanks, Doug. Yeah, that's Chris Pulver Pub, chrispulverpub@gmail.com. And for everyone that came into engineered options, I came to that usually that inbox is zero. Like I answer all those emails, and overnight I've got like 100 plus emails. So give me the day or two. I need to make sure I can get to all those emails. But obviously, we have a lot of students and members that are joining engineered options, so I get it. But yeah, it's going to be that's the best place to reach me for any of my member services. Is send me that email, chrispulverpub@gmail.com. Okay. And this week's trade for engineered options, yes, it's posted in your members Telegram. Yep. So engineered options member Telegram, you have the trade sitting. It was out at 9 a.m. I posted it. It's in Telegram, man. Engineered options. It was posted this morning at 8:48 a.m. Eastern time. Yep. So it was posted. Cool. All right. Here's the deal. So pending order, gosh, that 10 wide's not doing squat right now. So I will say this. 69.15. Gosh, that 69. Let's see if that gamma is disappearing at 6,900. It's not. All right. Look, I'm trying to get a trade today, right? I'm trying. I don't trade just to trade. Like I want to find if I'm going to place a trade, I want to believe that I have a good chance of winning it. So today we gap lower, we got some noise. The way that I picture this playing out is here's our close from Friday. Here's our gap lower. This would be an easy push up to backfill. And then the pressure for the week, truly, the pressure is going to be still to the downside. And you see this red dot on my screen? That is negative gamma. Okay. That pressure of negative gamma means that most order flows are going to be selling calls and buying puts. I will repeat that. Selling calls and buying puts, which puts a cap on the upside and puts more order flow and momentum and volatility to the downside. Okay. So until we get above 69.70, if we are below that, if we're less than 69.70, the pressure is to the downside. If we get back above it, then sure, we can go up to 7,000. Okay. So I want to keep an eye on that this morning. Let me see. Gosh, I'm trying to do the 10 wide and daily profit play. I don't know if it's enough direction to get us filled. We're trading at 65 cents right now. If this gets over a buck, maybe. Here's what I'm considering. All right, bear with me. I'm going to sprinkle in another daily profit play. This is kind of a defense trade, but it's also like just give me something, right? So you don't have to do this, but here's what I'm going to do for the day. I've got my 10 wide. If this shows over like $1.15 or $1.20, I'm probably just going to take the trade. Okay, we'd have to get a bit more direction to the upside in order to get that trade. We're trading at 75 cents. I'm asking for at least $1.20. $1.50 is what I have it pending for, but I don't know if we're going to get that much direction. David says the 5 wide filled for a buck. Okay. That's fine. Just keep in mind, David, that initial 5 wide was like a 68.80 or 69.80, right? It was a 69.80. So it's getting a little bit closer. That was trading for like a 10 delta this morning. Now it's a 17 delta. So I'm glad that it filled. It's probably fine. It's probably safe based on a Monday low delta. So I'm still happy with the trade. What I'm going to do for my side is I'm going to go, that's a sell buy. Damn it. So if I go, it's all backwards if I do a broken wing at the top. Fudge. Let me see. If I go, all right. I'm going to go old school here. What's our open? We had a plus minus 23.4. We still have a plus minus 18 on the morning. It's 9:50. It's not even 10 o'clock yet. Not even 10 o'clock yet. Look, a lot can happen for the rest of the day. This market opens up at 9:30. We get this nice little melt up. 10 o'clock, we kind of see where the market's going to make its move for the day. Are we going to continue to go up through the 10 o'clock handle, or is it going to be open, to 10 o'clock, and then the market decides, okay, we either continue to find positive gamma for the day or we reject, and 10 o'clock takes us right back down to the lows. Part of me thinks that the easier trade is to sell up here and try to grab that on the day. But it'd be like selling nice and high. I'd want to sell this thing at like 69, 90, 95, or 7,000. So that's what I'm trying to do right now is figure out where could I put a bear call spread or put some type of topping trade that gets me paid with a high probability of profit. What? 80 by 90 for buck fit. Okay. 80 by 90. Gotcha. All right. So the 80-85 fill, the 80-90 fill. Okay. That's fine. That's fine. Look what's happening in real time. My upper gamma levels are still active. So we have the positive negative gamma pivot around 69.70. We have the previous highs last week. The close around 69.78. All right. Here's what I'm thinking. Keep this trade pending. I'm going to go 85, 95, and 10. This is a interesting trade here. If you take this trade with me, please we're not overlapping things, so that's fine. This is a trade that I'm looking at a broken wing butterfly. I'm going to try to cap the trade today around 7,000 to 7,005. So I'm going to look at this trade for 50 cents credit. Okay, 50 cents credit for the day. Okay, I will post that in the chat. On the put side, I will do the same thing around the 6,900. I'm going to go 6,910 by 6,900 by 85. Again, this does not overlap. Try to get this one filled for, let's see if we can sneak in maybe, I'll try 50 cents. I'll try 50 cents on both. 50 cents credit. Okay. Now I'll explain these trades. One thing I wanted to calculate this morning, based on the VIX. Let me open up another workspace here. So VIX is, look at this thing. We had drama VIX this morning up to 1667, and it's retreating all the way down. I need to calculate. So we got a 1.04% move. That's what I'm anticipating for potentially the extreme of the day is a 1.04%. Now, that takes us way the fudge up here for a gap for a gap lower. I'm going to take the previous close 1.04. I mean, I do not think we're getting up to 70.37 today, but that is how I calculate my defense on 0 day. So 7037 top VIX. And again, the VIX is retreated, but I have to respect the fact that we were up to 1666 today. That would be get this out of the way here. 1667. So way up here. I don't think we can necessarily get there, but just in case, I want to keep an eye on that one. And then on the downside, we'll take the gap lower. And again, we're probably not going to get there, but gap lower, that's where we opened this morning. 1.04 puts us to about 68.63. That's wide, man. 68.63 bottom, VIX at 1667. Okay. So it's unlikely that price is going to get to one of these tops or bottoms, but this is also where I put in, some pretty strong defensive trades. So if I were to, sell the 40 by 50, which is what I'm going to do here, 70-40, gosh, I don't think we're going to do. I mean, this is literally trading for 0 credit right now. This is unlikely going to do anything, but I'm going to go here, try to get a buck on that trade. And 16 or 68.63, I'll go 60 by 50, 68.60 by 50. 68.60 by 50. Uh, 65 by 55. So 65 by 55. There we go. So that for $1. I mean, again, doubtful it's going to get filled. All right. So 10 a.m., this is going to be, let's see where the market wants to go. If the market gaps lower and just literally melts up all day, okay, we calculate out for daily profit play. We had a plus or minus 24 points on the day, 23.43. Look at the market's already up 29 points. Based on market efficiency, it's already exceeded the market maker move of the day. So my guess is that this probably caps the upside here pretty quickly. And if we are going to get higher, we get back to 69.70 again, it just kind of sits and hangs out here for the day, right? If it goes higher, that's fine. This is why I'm putting on my kind of topping trades up near that 7,000 handle, because I'm hoping that the market can't, open here at 40 and freaking go all the way up, 3x the market maker move. Anything's possible. But my thoughts of the day is we had a gap lower. The market spends the whole open grinding back, and then the market's going to backfill this thing and come back to neutral. That's more than likely what we're going to see today. Okay. All right. Don says paper trade filled for $1. Okay. That's good. And paper trading is totally fine. I did not, David, because I canceled that. That was in Telegram. I canceled the 5 wide. Right. So in daily profit play, I did the 5 wide here. I did the 10 wide here. And then at 9:40, I said, I'm only keeping one trade this morning. I'm keeping the 10 wide. I'm keeping the 10 wide, canceling the 5 wide due to intraday gamma levels. So look, man, I really think if you're at the 80 by 85, your trade's fine. It should be totally fine. So you're not in a bad spot. I think the market's going to, like I said, find a way to climb up here to kind of fill this gap and backfill that move, kind of neutralize the drama. And then the rest of the day is going to be probably coming back down to retest the open. Do not be surprised today. We're in negative gamma. Don't be surprised if the market comes back down to 69.35. So that means that your 5 wide, the 80 by 85, should be totally fine. To be, and again, on the put side was below 6,900. So, I mean, truthfully, it's like your dollar that you got filled on could easily trade for, 50 cents, 40 cents, 30 cents, 20 cents even. You could take some really good profit today. If the market responds to going lower and neutralizing, you could probably get 60, 70, 80% of that credit today. So keep an eye on that. Yep. So defense trades, I'll post those 2 pending orders. They're 2 broken wings. Again, they're probably not going to get filled, but I'll throw them in Telegram for daily profit play. Okay. Now, I know we have a lot of new traders today, so I just want to make sure, like, as I said, there's a lot of moving parts in these morning sessions. We can have some time prepping and talking, but once the market goes live, we're trading. It's nimble. There's a lot of moving pieces here. We do our best. It's like there's a lot of moving parts. It's like we have a lot of things that are time sensitive. And so when I get in, I'm moving things around, I'm canceling orders. Like, I know what happens quickly, but like these trades, like I'm not worried about these trades because they'll sit and they fill and they're at levels that I want. So let me take a screenshot of that. And these are, make sure they put them in correctly. So they're 10 wide spreads. Yep. So way up here at defense trades. All right. So here on daily profit play, adding 2 defense trades near the calculated VIX box highs. Unlikely to fill, but we have to respect the VIX 16.67 high this morning, despite the immediate fall. This is the current up and downside risk. All right, so I'm putting a bear call spread at that top, and I'm putting a bull put spread at that bottom. See if I can get a dollar on either one of those. Again, they're unlikely going to get filled. I don't think we're going to have that much intraday volatility today. Let's see here, 69.70. All right, Larry, you got a little more aggressive than I did there, sir, but still 10 wide looks pretty good. We're at 59. How do I know Larry's going to look good? If Larry's trade starts to see price go back down to recenter, then he's going to be looking very pretty. I would say again, manage that profit versus trying to let that thing ride all day. Okay. Yep. Catherine, you got that right for the engineered options. It was posted at 8:48 a.m. Eastern time, correct? I got it when it fell to 35. Gotcha. Okay. So you got in it right there at the low. I mean, I still think you're okay. You got 70. You're right at that positive negative gamma pivot for the day. Um, it's I mean, not gonna lie, like it's a little tight. It's a little tight because if we test the gamma, and we've seen this before, we test the gamma and we reject it, right? So that could be a nice little resistance level today. But obviously the market from an open at 43 plus minus 25. This is what I was going to say on the plus minus. We open at 69. Let me get this exact open here. Open at 69.44. So 69.44 and plus the 23.43. So that'd be 69.67. 69.67 should be the high of the day. Or I should say this, we should see price at or below this level. If the market makers are proper with their efficiency, we should see price below 69.67 today. So that's a good noted level. And the other one would be you take your 69.44 minus your 23.43 and 69.20. We want to see price above that. So based on market efficiency, if we can see price greater than 69.20 and less than 69.70, then the market makers have successfully done their job today. That makes sense? So do they always do it? No. But I'd say 85 to 90 plus percent of the time, we are going to see prices staying within the market maker move. Okay. So knowing that helps me kind of position for if I wanted to sell some premium above, sell some premium below, and price stays in the middle, that tends to do pretty well for us. Okay. The recent trades, I know those defense trades, Bucks were not defense trades with broken wing butterflies. They were just credit spreads. And the reason why is because they're way higher, man. They're way higher, which I don't think we're going to go that high today. So it's if you have a credit spread, it's going to get filled with a lot more ease and credit than it would on a broken wing. So I'm just doing a bear call spread at the top or a bull put spread at the bottom. I think that's the easier way to get filled if we have some direction today. But they're way out of the way. Okay. But remember that I also will change those trades. If I feel like, oh my gosh, price is really picking up volatility and we break that 16.67 VIX high, then guess what I'll do? I'll adjust my trades. But they're going to sit right now as way out here in the distance on the upside, way out here in the distance on the downside. And if it looks like price is going that way, then we can make that modification. A broken wing butterfly to me is a better trade because it gives me a chance for that $5 to $10 profit trap. Aggie, yeah, 11:30, of course. Waterfall income still going on, yes, for sure. Okay, let's see here. Don says, question on engineered options. TOS only fill one of the three trades, cancel the other. Yeah, we'll talk about that in the class this week, Don. I mean, by Thursday, Friday, if we're only filled on one, we can cancel the other ones. I'm just going to let them. I mean, look, they're all on my platform. They're good till canceled. I know exactly what my risk is. I know what my potential reward is. I don't have to do anything. Like if they don't get filled, I don't have to manually go cancel them. They just remove, the broker removes them on Tuesday. Okay. So we'll address it later in the week when, it's Thursday, it's Friday. Where's the market at? Do we get filled on our trades? Okay. All right. I got you. Yes, waterfall, 11:30. Cool. Well, give me 1 second here. Just have some messages coming in. All right, let's see here. Randy says, doesn't time to can the first 30, 60 minutes work against your pending? Not really. I mean, if they're way out of the money, then yes, right? Like a trade that's way up here at like 70, 20, 70, 30, it's way out of the money. So yeah, obviously if the first, 2, 3 hours goes by and there's no direction, even if we push up the entire day, it's probably not going to fill, right? But I mean, if we have a trade at, let's say 7,000, okay, and price is at 69.95, we're going to see some credit offered on that trade. If my trades for daily profit play are, if we have some volatility between about 9 a.m. and let's say 11 a.m., and we've got, highs getting tested, lows getting tested, those trades get filled pretty easily. Late in the day, I mean, here's the deal. If I had a trade at 69.70, right? If I sell the 69.70 call and I buy the 69.75 call, if price is trading in between these strikes, we should see real value in that trade. Like if we're trading at 6,973, I should see like $2 to $3 of credit available on that trade. That's what I want, right? Like if I'm going to call the top, it's like, and we're hitting that level, I want that to be, available for good credit. But obviously, when we're going out of the money, it's like this is why I'm so particular on setting, pending orders at credits that I want to take in, not what I have to settle for. So what was my trade this morning? $1.50, and it's offering like 65 cents or 75 cents. That's fine if I just wanted to settle for a trade, but I don't want to settle for a trade because my risk here is 850. My risk here is, 925. That's a big difference, right? So, worst case scenario is the market gaps lower, goes nowhere for the entire day. What do we get? Well, I don't get a single trade that fills. That's what happens to me is, I'm playing out of the money. I go high and low. I don't get a single trade to fill. And that's okay. I'd rather come to the market prepared, setting the orders and the credits that I want with risk that's under management versus settling for higher risk and, scrambling to find the levels that I want to trade. But good question. Okay, here. Blake, let me, so is that, make sure I'm not missing anything. Okay, Blake, I just sent you a message. I just want to make sure I'm not missing anything here.
All right, I'll check it out.
All right, thanks.
No problem.
Okay, so look, sometimes our mornings are crazy exciting. Sometimes our morning, which I expected a bit more volatility today, but we're not quite getting it. That doesn't mean the day is done. Market makers should keep things like I said before, 69.67 or around 69.20. Fudge, 69.20. So if we have an efficient market today, price should be, lower than 69.67 or greater than 69.20. So if we wanted to position around that, that's not a bad way to play today. Okay. In fact, just for fun, not for fun, I'll probably take the trade if I like it. Let me see what it looks like for those levels. 69.67. If I buy the 70, sell the 75, and split this thing, fudge. So this is really banking on some market efficiency, right? Here's what I will say. Now, none of this overlaps, by the way. My trade here, this is the 5 wide 85, or is that my broken wing? That's a broken wing there. That's probably not going to get filled. All right. I'm going to go back. This is kind of crazy that the market gap down 0.5%, and yet our market maker move is only about 17 on the day. It's like either just all noise, no bite, like all bark, no bite for the day, which is understandable. 69.70 is my calculated top. I'm going to go 65, 70, and 80. Right now, I can get 45 cents credit on this trade. I'm going to try to ask for $1. That puts me at a break even of 76. Okay. Or I guess my break even, if I get 50 cents in this trade, my break even will be 69.75.50. Okay. But I'm going to get $1 on this trade. That means I'm risking 4 to make 1, but I can also get a $5 profit trap at the end of the day at that 70 handle. 70 is the positive negative gamma pivot for the day. All right. We're getting a little wild today. I'm going to throw this trade in this is an expected move, broken wing butterfly. Okay, expected move, broken wing butterfly, based on our gap lower. So can we get, it's trading for 55 cents right now. Can we get $1 out of this thing? There's still risk in the trade, by the way. There's still risk in the trade. I'll post this in the chat for if everyone wants this in the chat. 100 people have missed out on this trade. Okay, we had like almost 400 members this morning. We dropped down to 250. Maybe they just wanted to pop in for injured options, and they're like, all right, peace. I got my trades for the week. That's fine, but we do this stuff every day. All right, so I'm going to go expect a move on the upside, and then the expected move is 69.20 on the downside. I will give myself a little bit more wiggle room here. I'm going to go 15, 20 by 15 by 5, and see if this one will fill for $1 credit. All right. So this is going to be for everyone. I'll put this in the Zoom chat. This is a bonus trade, and this is optional, of course. I want to make sure you understand exactly what we're doing here. SPX 112 expiration. I'm buying the 69.65 call. I'm selling the 69.70 call, and I'm buying the 69.80 call for $1 credit. This is coming to the chat here in about 30 seconds. And then I'm going to buy the 69.20 put, sell the 69.15 put, and buy the 69.05 put for $1 credit. Okay, this is my bonus trade. I don't know if these are going to get filled. If we test the upper levels, then it's possible. If we test the lower levels, it's possible. But what this trade looks like, I'll build this out in option strat. This would be flies. So I'm going to build out both of these. This is SPX for today's expiration, which is the 12th. On the call side, I'm doing 65 by 70. So I buy the 65, 70, and then the 80. There's my broken wing there. And then I add in a buy put, sell put, and a buy put. And that is down to 69.20. So 69.20. So 20 by 15 by 05. 20 by 15, 05. This one has 2 contracts. There we go. So this is the trade of the day. I'm playing with the expected moves. I'm putting in a profit trap. My goal is to try to get this thing filled somewhere in the middle. Now, right now, the broker says I can get this trade. This is interesting. It's showing up as a debit, which isn't true. Right now, the trade is offering 40, probably 35 to 40 cents on the call side, and about 10 to 15 cents on the put side. So if I took these trades now, I would have a max credit of about 50 cents, which is fine. right? I get filled, I get 50 cents. I can still make 50 bucks on the day, but I'm risking, if I'm wrong here, I'd be risking, $470 to the upside, and I'd be risking about $490 to the downside. I don't want to risk that much. So what I'm going to do is ask for $1 credit, cap my risk at 400, cap my risk at 400. And if I'm right on one of these trades, I can get $1, and I can also have a $5 profit trap. So I can actually make up to $600 on the day if I'm spot on at that top or bottom. But hopefully the goal is to just see price kind of finish somewhere where we can get filled and then have a profit trap to give me a little bit more room for error on the top or bottom. Okay. So I want to say this is 65, 70, and 80. 65, 70, and 80. Yes, that's correct. And 69, 20. 20 by 15 by 05. 69, 20, 15. Oh, yeah. I mean, it's right. I don't know why the option strat. And again, probably because I don't pay for this. This is just free. Like, I just want to build the trade and show the visuals. This should be showing like a very small credit right now versus a net debit. It shouldn't be showing a debit. Okay. Yeah. Yeah. Sometimes it is. There actually is. Bill said it looks like Batman. There actually is a trade called a Batman trade. It's not officially like an option strategy. It's not a real thing, but it has been called this. It's not. It's not with this broke wing butterfly. It's actually with two ratio spreads, which are and it's an interesting trade where ratio spread is basically it's an undefined risk trade. So let me give an example. Give me a trade like in Nvidia, right? Nvidia has been completely sideways for the last couple of months. So we had the up here to 212 or so, down to 170. Interestingly enough, I mean earnings on Nvidia, it's out to February 25th. Something could make. I'm not going to take the trade. Like it's undefined risk. I think it's a silly trade, but I do think this actually could be a pretty interesting setup if you were to manage the trade. There's no way I'd just take undefined risk on Nvidia because it clearly could be more volatile than we want it to be. However, let's note this level. Let's say Nvidia at 215, okay, and the Nvidia at 160. I would say I don't want price to go above 215, and I don't want price to go below 160. Is that a fair assessment based on what we have for this last couple months of price action? Right? Pretty fair. Okay. And if I wanted to go kind of equidistant, it's like, well, what's 215? Well, that's an all-time high. That's $30 higher. So let's make it equidistant. Let's go 215 and then go down to 155 because that would be $30 lower and $30 higher. Yes? Type in a wire yes so you're with me on this trade. Does that make sense? So you want to see like a Batman trade. Here's one way to build it. All right. So if I did, so this is the trade that I'm looking at pending right now for that's in the chat. So you've got that trade in the chat's bonus trade. If it gets filled today, I'm hoping to make $1 on the winning leg of the trade. But the goal is if we have if price can come back and test wrong color. If price can test 69.70, okay, or 69.15 near the close today, this is worth $500. That's worth $500. So if we're anywhere around 69, 66, 67, 68, 69, and 70, that's the profit trap at the end of the day. If we're at 69, 19, 18, 17, 16, 15, that's a profit trap at the end of the day. So we will see if price actually makes the venture to those levels today. Maybe it does, maybe it doesn't. Okay, all right. Let's build out that NVIDIA trade. So, the smart way to trade that would be doing what I just did with like a broken wing butterfly. If I went out so we have earnings on the 25th. Okay. If we wanted to get some big fat premium on NVIDIA, I mean, look, I think that through earnings, we're going to get a little bit of a juice from the earnings buildup, right? So that vol expansion will get some extra credit for it. Post earnings, I mean, one thing that's really challenging on NVIDIA is anybody that buys puts and buys calls looking for direction typically loses. It is it is such a big stock. It's so liquid that usually it's a big chop fest during earnings. So I'm curious, like if we can stay below 215 or stay above 155, how we can build out a trade. Now, the risk defined side of me would say, okay, let's build out February 27th. That takes us into the week of earnings on NVIDIA. And let's build out a call fly. So if I did the 215, so 215, 220 by 230, there's a broken wing butterfly. Okay. Do I want to take the trade right now for 17 cents or 20 cents? No. I'm not going to risk, $500 to make 20 bucks. But if this could fill for $1 or $2, it's a pretty good reward to risk trade with a reasonable probability. Okay, we'll look at the deltas here in a moment, and then let's pair this with the bottom. So let's go buy a put. Oh, you know what? I think I did the SPX. Hang on, I got to do the SPX trade differently because I put them all. They're all puts. I need to do calls and puts. Doy. But I'll build this one out. So puts. So that's a buy put, and a sell put. Let's go buy the 160, sell the 155 with 2 contracts, and then do 145 down here. So that's a define risk Batman trade, right? Fancy name, but I'm trying to be equidistant, right? If price goes $30 here, $30 here, I mean, what's the expected move? This is what's beautiful about trading options. Look at the expected move for NVIDIA. The expected move going out to the 27th, earnings on the 25th, we have a plus or minus 19.6. I repeat, 19.6. We are looking at doing a trade $30 higher, $30 lower, which means the market has to do like 1.5 times the volatility that's already been forecasted in. Is that probable? No. Which means our trade actually looks pretty good, but I would not accept the trade for the offered credit at like 40 bucks. If this was a trade that I could get, let's say I get $1 for this trade and or $1 for this trade, I like it. Okay. Realistically, I would even go a little bit higher to say if price makes a run one way or the other, I'd probably ask for $1.50 and $1.50. Because if I'm wrong, I'm risking $3.50 to make $1.50, but I still have a profit trap near the expiration. Right. So if we get into that profit trap, that offers me a $5 winner in addition to the $1.50. So I can make $6.50 on this trade while only risking $3.50. Does that make sense? So if I wanted to do define risk, that's a pretty simple way to do it. Set the credit at like $1 to $1.50. I like $1.50. Okay. And price would have to move. If price doesn't go anywhere, then yeah, this probably doesn't get filled. But I'm not going to take a typical ratio spread because that's way too much risk. If we did the ratio spread, I would cancel this one and I would cancel this one. And that's your ratio spread, right? Now, what you are banking on is the fact that price will not move past that 2 or that 155 handle. And you're banking on that price will not move above the 220 handle. Okay. So if price is greater than 155 and price is less than 220, guess what that means? Right now, you can take the trade for like 230 bucks and get paid. But if price goes down here or price goes up here, you have unlimited risk to the upside. And, obviously the market's going to treat this like if the stock goes to zero, you'd have $15,500 risk on the downside. That's assuming that price goes to zero, which I think we can safely say that's not going to happen. But that would be like, that's technically the ratio spread Batman trade. Okay. So that's why I don't like to do undefined risk. I want to keep it defined. You know what? Just for fun, like I said, I feel bad that we had like 400 people in the room today and a lot of people bounced, but that's fine. I'm going to put this in as a bonus in for my general telegram. Okay. 1 second here. Engineered. Options update. Despite the gap lower this morning, EGO trades are still pending in my broker platform. Good till canceled. Discussed a plan. The orders are pending. And they can sit in my platform. Good till canceled. And that's all I have to do for today. All right. So I want to make sure, like, I think I'm getting some feedback on, like, people expect the orders to be filled. Am I in? Am I not? It's like, look, these are good until canceled. These trades can just sit. Sean says, NVIDIA sitting at the 100 MA, you don't have an issue with it dropping below. Well, based on the market maker move, Sean, no, because I mean, we're looking at a plus minus 19.6 and we're going $30 out of the money. So we'd have to have like an outlier type move if that's going to happen. So what I'm saying is, let's set a level here. And look, I'm going to be, let me entertain the trade. I'm going to go for $1.50 credit or up to $2 credit, because if I put in $2, I'm risking $3 and I have a profit trap, right? So before we ever press this button, I'll tell you exactly where my break-even price is. And this is also a trade that may not take. If NVIDIA stays flat for the next 3 or 4 weeks, nothing's going to happen, right? But if price starts making a run up through earnings or a run down before earnings, we might get filled on a trade. We'll keep an eye on it, and then we have the earnings calculation. Okay. All right. So I'm gonna put $2 in here. So I'm gonna go 215. Let's go call side. So if it went 215 by 220 by 230, right now, this is trading for 16 cents. I'm not going to take the trade for 16 cents. So this would be a pending order, $2 credit. Okay, $2 credit. So where does this trade get into trouble? Well, if we have a wild sell-off that's market-wide and NVIDIA gets some of that exposure, and this is all happening prior to earnings, it's going to shift around our current price and current volatility. Do I envision the volatility ripping to 20, 25, 30 before all these earnings come out? Not necessarily. So again, man, it's going to be defined risk, right? It's like, what's the most I can lose on this trade? $300. To the downside, what's the most I can lose if I take the trade for $2 credit? $300. That's my trade. So I'm going to put $2 credit. So I'm buying the 215. I'm selling the 220 with 2 contracts. I'll put this in the chat. And then I'm buying the 230. So for $2 credit, pending order. Okay. And then the other side, I'm going to do the one. I'm going to go one. Let's go 155 by 50. Let's give ourselves a little bit more room to the downside. I think there's certainly more pressure to the downside than upside. Let's go $2 credit here. That way we go a little bit more equidistant. Take a look at the spacing on the options chain. So if I go, this is the expected move, and then this is our line in the sand, we're giving ourselves about 15 points, right? A buffer of like 15 points, and that's our profit trap. I go to the downside, go to the expected move. Expected move is here. Same thing. I give myself about 15 points, and that's my profit trap. So I like that trade. All right. So I'm going to buy the 155, sell the 150 with 2 contracts, and then buy the 140. So $2 credit, pending order. All right. I'm going to put this one in for my public Telegram. And then Blake is going to push. So we did a engineered option session last night. We've got a recording of that session with Lance and I. I'd like you to see that. Look, engineered options. I haven't launched a service in like 8 months. Why? Because I'm busy. Because I've got a lot of trades already running. Because I have super successful services already. But when I thought about what could help me be more profitable and make my trading a little bit easier in 2026, it's engineered options. So I have the trades sitting. They're already sitting for the day. They're good till canceled. They'll ride until next Tuesday's expiration. I have a masterclass this week on engineered options. It's a great service. I just thought about one thing that I do a lot of is I'm typically having to take a bit more risk than reward on a lot of my trades. And I don't want to continue to have to do that. If I keep building services where I take more risk than reward, eventually that's going to catch up to me, right? If I have like a windfall of losses, that's gonna sting a little bit more than, kind of like backstopping my risk. So engineered options is that, like, I'm backstopping my risk. I'm going 1-to-1. I'm putting out trades that are 1-to-1 or better, and that's engineered options. And it's also very simple to run. Okay, so I'm going to put this in. This is a bonus trade. Bonus trade, completely optional. Optional, but we had a nice conversation about it during daily profit plan, where all traders are welcome. Here's my trade. NVIDIA, earnings on 225 of 26. I believe that's when earnings are. Earnings on the 25th. Yep. So 225.26. So I'm using the 227.26 expiration. So 227 expiration. Let me get this out of the way here. I am buying the 215 call with one contract, selling the 220 call with two contracts, and then buying the 230 call with one contract for $2 credit. Pending good till canceled. NVIDIA 227 expiration. Buying the 155 put. Selling the 150 put. And buying the 140 put for $2 credit pending good till canceled. If one side of the trade is filled, my risk is $3. That's max risk. And my upfront credit is $2 with a potential $5 profit trap at the sell strike. So max profit potential, $7. Max risk, $3. And then visually, I'll put in this screenshot here. This is what it looks like. I went 155, 150. Add in the buy put at 140. Right there. And then the 215, 220, and add the buy call at 230. There. So that's what the trade's going to look like. And I'm going after, I'm gonna block this one out. So let's put a shape in here. And color this in. We're going after net credit of $2 either side. Okay, we'll go white font, make this a little bit smaller. There. Is that better? Nope. Outline. There. All right. So going after net credit, $2 on either side. Plus we have the profit trap of $5. So there's the visual. And again, when I put trades like this together, I want to make sure you understand what the heck we are doing. Do not ever place a trade if you don't know the reward and risk. Okay. So if price is going to go blow through the call side, I risk $3. If it blows through the put side, I risk $3. Okay. If price stays in the middle, I might not get enough credit to take this trade, which is okay. So, but it's going to be a pending order. I like the trade. So we'll play NVIDIA. I think the market is intentionally sideways and choppy, and then we're going to have to wait for some additional catalyst. But based on current volatility, based on the current option chain, based on the options earnings that are coming up here in about just over a month, I'm going to place a trade. All right, Blake. Sorry that was not 5 minutes, but we'll still go. All right, I'm going to post this for a bonus trade. If anybody's interested, there it is. And let me get some final questions here. Sandy says, I sent you an email. I'll take a look at it. Yep, I have like 100 plus emails that came in from last night, so I'll be busy with that. We have a lot of inquiries from engineered options. On that note, Blake is going to play a session. And I appreciate everyone's time today. We've been at it for 90 minutes. Even though it's been a fast-paced morning as far as me talking, price action based on the gap didn't really do much. So the markets today are still pretty quiet, and I'm going to leave those pending orders kind of sitting and marinating for the day and see what kind of happens. I am playing the market maker efficiency game today. If the market is going to come back and be efficient, then let's see if I can get a couple of pending orders filled. So for my daily profitly update, for my bonus trades today, I'm still managing all this stuff, right? Do you buy all three of the engineered option trades? I'm doing all three. So all these trades here, and I put this in for Telegram, engineered options. Blake, let's get that thing ready to fire up. I'm just going to go one last thing for engineered options. Here's what I posted this morning for members. Despite the gap lower this morning, engineered option trades are still pending in my broker platform, good till canceled. I discussed a plan. The orders are pending, and they can sit in my platform, good till canceled, and that's all I have to do for today. That is it. So I'm putting this trade, this trade, this trade in my broker platform. I outlined all that in an 8-minute video to show you how I'm choosing my levels and why I'm taking the trades I'm taking for the week. Okay. This is good till next Tuesday because we don't have trading on Monday because of Martin Luther King Day. So markets are closed. So my trade is, can I get the trade filled between now and Tuesday? The goal is if we get filled, today or tomorrow, great. Trades are in, then we manage them. We have class on Thursday, spot check on Friday. If we're sitting in profit, we'll be fine. If the market starts lower today and goes up for the rest of the week, that's out of my hands. I'm trying to do my best to participate in the week and give the market some flexibility. And I mean, we still have gamma levels down to 6,900. Like right here, this isn't some like random trade that I guessed. It's like the market's probably going to find 6,920 or 6,900, and you will thank me for having those pending orders, right? So it's all part of a plan. That's why I'm just saying follow the video, follow the plan, and know what your reward and risk is. And that's all we can do is control what we control. That's the plan. Okay. Don says you could also do SPX on engineered options. You could. And again, in that video, I explained why I'm choosing to do XSP because I'm just going to tighten up the risk a little bit. If there's some uncertainty, I'm going to tighten the risk. That's all. Karen, what's the previous screen? Oh, never mind.
I took it back.
It's okay. It's fine.
You want it back?
No. Yeah, like 30 seconds. 30 seconds.
Here.
Thanks.
Go for it.
This is the level I'm talking about. These levels are still valid. Okay, we are in negative gamma. These are the strike levels that for the week could get tested. So if we get testy here, again, the week started out down. We had last week's close, this week's open. Technically, the market is red for the week. So the market's negative. If the market is going to find a way to finish positive, we're going to see this level retested, right? Possibly even overshoot it. And then if we get positive for the week, that's what we're looking at. That's how an engineered option trade would work. If price does this all week and it just goes up and up and up and up, and that's all that happens, then I didn't get filled. And that's okay. And we'll come back and we'll tackle it again next week. But these levels are still valid. And it wouldn't surprise me if like end of the day, the market's down here. We're in negative gamma. It's easier for flows to start filling up where the market may want to test some of these support levels. So that means I get filled in engineered options. If the market can carve out a win for the week, we'll be fine. Right? We can have a win. We can have a win. If we have a third, another defense trade, we have a win. But I'm looking at maybe 1 or 2 levels to give us a win this week. So again, it's part of the plan. All right. That's why if I'm a little bit cautious, then I trade smaller. It's that simple. So all right, Blake, go and fire it up, man. And
ready?
Everyone, yeah. So it's going to be a busy week. Come back and join me tomorrow for Daily Profit Plan. Come back and see Blake and I in the mornings. 9 a.m. every single day. We'll grind this stuff out. I'll address these questions. It's nice seeing a big fat room today. I hope that people want to turn up and show up. Daily Profit Play got a bunch of pending orders today. Let's see if anything fills. I'll manage them. If you got the 69.80 today, great. It's looking good. You already closed out for some profit. I'm happy for you, and I'll continue to monitor the trades for the day. So, all right, we'll talk soon.
Beautiful.
Thanks.
Here we go. Thanks, Chris.
I'm going to show you how to get the money doubling returns every 7 days. That's what we're going to be targeting today. Now, I realize it sounds like a very bold claim, and it shouldn't be taken lightly. But we're about to show you how this might change the way you approach trading forever. You see, over the last 60 days, my team has been field testing a radically new type of option.